Okay, good morning, everyone. Thanks for joining us today on our weekly trade and tariff briefing. I'm Anna Maiden, Director of Grants and Engagement at World Trade Center, Utah, and I have the pleasure of facilitating today's conversation. So it's good to have you all on board today. If you're here for the first time, this weekly webinar series is intended to provide everyone with the latest information about trade and tariffs. And you can also, just as a reminder, to view our previous webinars on our YouTube channel. And you can find updates all the time on our dashboard at our website, and we'll send the link in the chat for you. And today we're excited to hear from the infamous Ben Kolendar. We're really glad to have him on to give us the latest, greatest updates. He's our Chief of Staff at World Trade Center, Utah, and he'll give us some updates and run us through the dashboard. And then we will have the pleasure of hearing from Jason McMann, Head of Political Intelligence at Morning Consult. So thanks, Jason, for spending time with us today. And he will speak about the Made in America report launched earlier this year with his company. And over to you, Ben.
Thanks, Anna. Going to share my screen and pull up the tariff dashboard. Here we go. So many of you are repeat visitors, but if you're here for the first time, just so you're aware, you can always find this information updated on our website at wtcutah.com/tariffs, where we track all of the latest tariff announcements. I am going to scroll down. As many of you have heard by now,
It looks like Ben is frozen. Ben might need to disconnect and come back on the call. Let's just see. Thanks for your patience, everyone. Okay, let's see if we can get him back on. In the meantime, for those of you who are just joining us, please feel free as we go along with our updates on our dashboard, and especially as we get into discussion with Jason, please put any of your questions into the chat. We'd be happy to answer them. So that will be good. It's really nice to get your feedback and your input as we go along today. And let's just wait a couple of more seconds. We might need to start with Jason if we don't get Ben back in a minute, but let's see. Just give him a few more seconds. Love a good technical difficulty on a Friday morning. Everyone take a sip of whatever beverage you've got in front of you. Jason, maybe we'll flip to you if that's okay.
Yeah, perfect. And then just let me know when Ben hops back on if you want to transition back, or I'll just finish my spiel. But yeah, happy to kick it off.
Okay, sounds good. Thank you.
Wonderful. Yeah. Well, thank you so much for having us join your webinar today. I'll give maybe just a 10-second corporate overview since my corporate handlers are not here today, so don't tell them afterwards. But my name is Jason McMann. I'm the head of political intelligence at a survey company called Morning Consult. We like to think of ourselves as kind of a high-frequency survey research company that helps other partners make more data-driven decisions using public opinion data in the US and in about 45 countries. So what we have in store for you today is just about a 10-minute walkthrough of a presentation on Made in America and what that product segment looks like, how it's evolving in consumers' minds amid this tariff scenario we're seeing play out. But I do see we now have Ben back. So Ben, I don't know, do you want to jump in with the dashboard overview up front, and then we'll pivot back to Made in America?
Is that okay? I apologize to our
please.
audience. My computer decided to freak out at just the wrong time. But I will, maybe I'll just give a brief overview because it's hard for me to share the tariff dashboard on my phone. But I'll keep it brief today, even with all the announcements. You guys can all go on our website, wtcutah.com/tariffs, and follow along with me if you'd like. We'll go over the 232 tariffs briefly. The pharma, kitchen cabinets, and upholstered items on furniture have new tariffs associated with them, and then 25% on heavy trucks. So those tariffs are all captured. We're awaiting the HTS codes for the specific products that are being tariffed, but we'll update our dashboard as soon as those are available. The next set of tariffs, and by the way, that makes 13 total 232 tariffs that we're tracking, 7 of which are active. So that means that we still have 6 in the pipeline that are coming at some point this year. We don't know when. That means we've got the new ones on timber, lumber, heavy trucks, pharma, and the existing ones on steel, aluminum, copper, autos, and auto parts. So that is what we're tracking on the 232 side. One other update is the U.S. Court of Appeals for the Federal Circuit has issued a decision yesterday on the 301 tariffs. So this is something that's been a little quiet. It's been in the works for a long time, but essentially validates the administration's lists 3 and 4A from the first Trump administration in those 301 cases. So if you were holding out hope that the federal court would strike those down, that is not the case. That may go to appeal to the Supreme Court, but for now, those are active. So just a quick rundown, and then I'm going to hand it back to you, Jason. Sorry for the interruption this morning. I'd just like to do a quick rundown of dates that we know and don't know for things that are coming up, because there is so much on the horizon that may be coming soon. So I'm just going to do this quick rundown, and then I will go off camera. Steel and aluminum, public comment for inclusions. This means additional things for tariff. Normally, we're talking about the tariffs that are coming and being aware of it, but if in exclusions potentially, but this is inclusions. It's open until the 29th, September 29th. And the link is on our dashboard to make those amendments. These new 232 tariffs that we're talking about today are not effective today, but they are effective on October 1st. So something to stay to mark on your calendar if you're looking at importing goods. USMCA public comment is open until November 3rd. So this is the renegotiation for USMCA, which is set for July of 2026. Public comment for auto inclusion. This is the process, not inclusion items, closes on November 3rd. We have the Supreme Court oral arguments coming up for these IEEPA cases on November 5th. The China truce is set to end right now on November 10th. And then way out in the future, we have the USMCA joint review, as I mentioned, in July of 2026. What we don't know is when and how these additional 232 tariffs will drop on wind turbines, semiconductors, polysilicon and its derivatives, unmanned aircraft, jet engines, and critical minerals, but we'll stay on top of that and update this group as we always do in these weekly webinars and on our tariff dashboard as those updates become available. So now I will go off camera and hand it back to you, Jason. Thanks for your patience.
Yeah, no problem. All right, let me just get the screen share started. And we'll cross our fingers this works okay. Just give it a minute to pop up and should be good to go. All right. So as I said, we'll shift gears a little bit and wanted to spend maybe just 10 or so minutes talking about the American consumer mindset when it comes to quote unquote made in America products. I'd say over the past year, we've seen a lot of interest in kind of having brands lean into this product segment a bit more amidst some of this tariff-related reshoring drive that we're seeing come out of the current administration. And so in this annual edition of the report, we've kind of dug deep to see not only how consumers are feeling about made in America products or kind of reshored products in general, but would they pay more for them? How much more would they pay? How does made in America stack up relative to other product attributes when it comes to purchase consideration and things along those lines? So I will just jump into the opening data slides, and all of the data that you'll see here today comes from proprietary survey data that we've collected on a monthly basis over the past 3 years. But just at a top level, one of the questions we ask to US consumers, and for everything you'll see again, just kind of representative samples of US adults, the first question we asked them is kind of how often you have intentionally sought out Made in America products over the past year. And you'll see that broken out here in the top segment of this bar chart for US adults, and then by gender, generation, and political affiliation as well. And if you look at the US adults row, you'll see in general that a majority of American consumers say they do seek out domestically made products at least sometimes. So the top line number is pretty favorable. What we've seen, however, over the past 12 months is that number has declined by about 6 to 7%. And it's really the case that it's swung down across most of the demographics that we look at. So you'll see that here on the next slide, just from January 2022 onwards. And again, same question here, just looking at trends over time. And one of the interesting things that we're seeing is if you look at the split here starting around March 2024, more or less, no matter what demographic group you look at, we're seeing declining shares of people say they would intentionally seek out this type of product. And it's pretty consistent across demographics. I draw your attention here to the political affiliation column. One of the things we're seeing there in that panel on the right is that, not surprisingly, we have a larger dip among Democrats, but we are also seeing a bit of a dip among Republican-leaning consumers. And part of the reason we think this is interesting is that we know at the moment a lot of this again, reshoring and Made in America push is really associated with a Republican administration in Washington. And yet even among Republican voters, for example, or Republican-leaning consumers, they're also expressing a bit less interest in domestically made goods. So we'll give you a sense on some of the upcoming slides of why we think that is the case, but wanted to do a bit of a detour here into another set of similar trends we're seeing in parallel. And this data here focuses on not kind of how often people seek out Made in America products, but whether they're willing or unwilling to pay more for those products. And sort of the wallet is really where the rubber hits the road here. If you look at US adults, we're seeing a somewhat smaller share, 42% of US consumers as of the middle of this year, we're saying they're willing to pay more for domestically made goods. Still a plurality, but not quite rising to that above 50% majority we saw when it comes to shares of people who are seeking them out. And it's pretty consistent across the board. The big outlier here you'll see at the bottom is Republicans, where they just say they're a little bit more willing to shell out for these goods. What's interesting on this front as well is that if we do a sort of similar exercise and break this out over time, we're seeing declining appetite and consumers' willingness to pay more for these products, almost tied to that exact same time period, so March 2024. So not only are we seeing declining enthusiasm for US-made products, but also declining payment willingness. So we wanted to try and get a sense of what's going on there. Again, we do think partisanship is part of the issue, given that Republicans remain a bit more enthusiastic than Democrats, but the fact that we're seeing these really across-the-board declines suggested there might be something else going on. So enter price sensitivity. One of the things our economists track at Morning Consult is what we call price sensitivity, which essentially refers to how willing consumers would be to forego purchasing a product if prices were to rise. We've seen price sensitivity going back to early 2022 kind of increase sporadically. It was a bit volatile in earlier years. But if you look at this March 2024 time period, which is when we start to see waning interest in Made in America products, we also see quite a few successive months of price sensitivity index rises. And that indicates just that consumers are really just becoming more and more inflation conscious over that time period. And we think that might have something to do with their lack of interest or declining interest in US made goods. You'll see that really continue into the rest of the year and now into the middle of 2025 with a big rise here again at the beginning of 2025 when we first started to see a lot of these waves of new Trump administration tariffs roll out. And we think essentially what's happening here is you kind of have Americans' collective memory of just pronounced inflation over the past couple of years now being compounded by concerns about tariff-related inflation, which is something else that we track. And then those things combined are really driving Americans to reevaluate some of their purchasing considerations and their spending behavior as well. We have a similar question here that we'll show just briefly, and this one asks not about quote-unquote Made in America products, but it asks about reshoring, kind of a more generic angle or way of getting at this issue. And one of the things we wanted to see here was how consumers responded to a question where we said, would you support reshoring by US companies if prices stayed the same versus scenarios in which prices would rise after the reshoring took place? We know in general that it's really the latter scenario that probably tends to be more realistic. And part of the reason for that is just that domestic labor, as anybody who has watched globalization over the past few decades knows, tends to be quite a bit more expensive than foreign labor. And so the data point that you'll see here across these charts would be the share who say they only support reshoring by US companies if prices remain the same. And the trend we call your attention to here is really just the inverse of what you were seeing in those earlier charts. So an increase in the shares of people who say reshoring's fine, but we're only in support of it if prices remain constant. Again, speaking to some of that underlying price sensitivity that we think is one of the drivers here. We'll shift gears a little bit now and talk about sort of Made in America as a function of broader purchase considerations or product attributes that influence consumer behavior. And on this front, one of the things we wanted to get a sense of was how much Made in America is really a driver of consumers' purchasing behavior relative to other factors like affordability, you'll see here in the top left, followed by quality, and then sustainability. This rubric has remained more or less unchanged in terms of the ordering over the past few years. It's very much the case that Americans care a lot about affordability, regardless of what generation they come from or their political affiliation, followed by quality. Made in America tends to be a bit further down the list. It's not at the very bottom, it is above sustainability, but the fact that it's kind of in third place among these four things we look at, I think just speaks to some of the difficulties that US companies might encounter if they were to lean into this product segment on top of some of the price sensitivity issues we chatted through a bit earlier. We'll skip this slide and move on to some payment consideration questions. And so you saw on the previous slides that consumers are less and less willing to pay extra for Made in America products. On this slide, we'll give you a sense of exactly how much extra they are willing to pay. So if we take that 40% of US consumers who said, yes, we'd pay more for domestically made goods, we then said, okay, how much more would you be willing to pay? And you'll see those responses grouped here into 1 to 5% ranges, 6 to 10%, and so on and so forth in additional 5% increments. And what's really interesting here, if you look at this top row here, the US adults bar, is that about 75% of US consumers say they would be willing to pay only up to 10% more for a domestically made product that used to be produced abroad. And those numbers are pretty consistent if you look down the bars here across generations and consumers broken out by political affiliation. These numbers have also been pretty static over the past few years. So not much movement here, again, with just really the large share of consumers concentrated at the bottom end of that payment scale. And so we kind of look at this and we say, you know, not only are 40% of consumers, relatively small number, willing to pay more for these products, but among that relatively small group, 3/4 of them would only pay up to 10% more. And so if you're a US manufacturer, for example, and you're saying, you know, it's not possible for me to reshore my supply chain or just start producing domestically in the first place without raising my costs by above 10%, or keeping them in that under 10% range, for example, we think for many companies, this calculus is really just not viable as a function of how consumers are thinking about things nowadays. We'll give you now to close out in just the next couple minutes a few tips on how you might be able to win over consumers if you are active in this product segment. So if that is the case, all hope is not lost. We think there are some clever things you could potentially do from a marketing or communications perspective that could help shift the needle a little bit. And we'll start off with this one, which is just kind of meeting consumers where they are in terms of what Made in America means to them. Often from a supply chain perspective, we at Morning Consult kind of have two scenarios for production in mind. One where you could use foreign parts and have them assembled domestically, or one where you could incorporate both US labor and US parts into your supply chains. And when we go ahead and we ask US consumers which one of these definitions really aligns with what comes to mind for them when they think about Made in America, it's very much that latter scenario where companies are using both domestic parts and labor. You'll see about 57% of consumers say, yes, that's really the definition of Made in America that resonates with me, compared to only about 24% who view that hybrid approach as counting for Made in America. So if you are thinking through advertising or messaging campaigns as you lean into this product segment, really emphasizing those scenarios where you are using not just US labor, but US parts as well, is something that we think would resonate with consumers. We'll give you another slide here. This one focused on nationalism, and I know there's a lot going on here, so we'll just draw your attention to this scatter plot on the right. But long story short, the people who describe themselves as more nationalist consumers or who say they're more proud to be an American are also more and more willing to shell out, to pay extra for Made in America products. And so one of the things you could consider that we've seen in quite a few public marketing campaigns over the past year is just really leaning into this nationalism angle when you're marketing your products and framing them as made in the USA, supporting Americans, a proud American company, serving proud American consumers, and things like that to really help prime those nationalist attitudes among consumers who view that as important when they're buying domestically. And we'll close out here with just one last slide and then maybe open it up for Q&A if that works for you all. But we also wanted to give a sense of when people think about a Made in America product, what's the reason for which they might buy it? What exactly is it about something that's labeled Made in America that consumers have in mind? And so what you'll see on this slide here would just be the shares of US adults who cite a variety of different product attributes as the most important driver of their decision to buy Made in America products. And if you go to the bottom of this list here under this economic considerations category, you really see it's creating and protecting jobs for US labor that stands out a bit more. So if you are thinking about marketing these products, playing up the labor angle is something that we see in our data as resonating with consumers. By contrast, if you go to the top of this table here, focusing on raising US workers' incomes really doesn't seem to matter as much. It's one of these confusing things where if you talk about jobs in general, consumers are very excited about it, but they don't care quite as much about how much those jobs are paying, at least when it comes to purchase considerations for this particular product category. Some of the things that resonate less would be a competitiveness angle. So if you look at the second row here, making US companies more competitive, only about 9% of US consumers say that's the most important driver of their decision to buy domestic. Similar story if you look at supporting US businesses, only about 16%. And so it really tends to be these labor-focused narratives, specifically tied into jobs that we see as a case where companies might get more bang for the buck, again, in marketing or ad campaigns and things along those lines. So I will close out my portion of the presentation here, but we're happy to circulate this report afterwards in case anyone wants to take a deeper look at your leisure. And if you have questions, more than happy to answer them. So I think, Anna, am I passing it back to you now? Or
Yeah, Jason, thank you
Okay.
so much. That was like incredible data that you've presented today. Just encouraging anyone who is listening to this to ask a question or put it into the chat. I might kick it off with a little question if you don't mind. And Jason, this might be outside of what we were talking about, but do you ever put any data together? There may be people on the call that do a lot of exporting, and with if people are going down the path of a Made in America campaign or branding or product, how is that concept perceived perhaps in other countries? If you have any comment on that based on the data that we've been discussing, either in the past or now in the current climate.
Yeah, so one thing we have not surveyed on directly has been perceptions of Made in America products in other countries. So if you have say a US factory that's operating in China and then ships production to the US, we have not asked Chinese consumers, does this make you unhappy or not? But one of the things that we do track in a similar vein is more generally kind of how do you feel about the United States? And then in turn, how willing are you as an overseas consumer to stop buying US products as a function of the trade war we have going on at the moment? And one of the interesting things is if you kind of look at these trends over time, especially from late 2024 onwards, you see views of the United States and views of US products, which we measure kind of by more interest in boycotting them, really spiking every time there's a tariff announcement. So really starting in early March when we saw some of the Canada and Mexico tariffs first start to go into place. If you look in Canada and Mexico among consumers there, their views of the US really tanked and their interest in buying US products really tanked as well. We also track at Morning Consult views of individual brands. And so at that point in time, we put together a lot in the way of just sort of industry averages or looked at large American companies just to try and get a sense of movements in number one, brand favorability, and number two, purchase consideration. And those both tanked at the time as well, typically for the larger brands you would think of as being more American companies. And so it doesn't answer the question directly, but my sense would be, I think it tends to be some of these broader issues, just the fact that tariffs are being imposed and that countries are not happy, nor are their consumers, with some of these elements of the trade war that would drive views of US companies and brands a little bit more than the Made in America issue, would be my hunch.
Jason, I've got a question as well. Many of the companies that attend or digest this content are going to be, I imagine, split. they're going to have, maybe I'll give an extreme example that I heard last week where one of your end customers is actually the US government. And another one is maybe a segment that is not going to be high on the Made in America sort of message. What would you advise in that realm? Because you have these considerations at play that you have to weigh. Well, you're the same company, like you gotta thread that needle. How are you seeing companies do that well?
Yeah, I think maybe the silver lining I see in our data on this is that there aren't that many consumers who just say, like, we avoid made in America products entirely. We just flat out hate them. The share that kind of just prefers to always avoid that type of product is relatively low. I'm just pulling up the data in the background. And if you ask people kind of, are you in the never category? You sort of never look at those products. It's only 11%. And so I think if you're saying, maybe leaning into this would alienate some of my consumers, but it'd be good for me as someone that's working with the government, for example, I think there's relatively limited risk you would make consumers angry. They might not be 100% thrilled, but I think the fact that there are a few in that never bucket and the fact that there are other considerations like quality that tend to outweigh made in America, I think you'd be on safe footing. There might be risk at the margins, but I think in general it would be okay.
That's great. That's great advice.
Just checking the chat to see if we've got any questions here. And just to say to everyone that the presentation will be shared. Thanks a lot for that, Jason. In terms of the data that you've got coming up, or what are you looking at in the upcoming months to keep your eye on and maybe report back?
Yeah, so one of the things we maintain is what we call our US consumer tariff sentiment tracker. And this looks at support for and opposition to different types of tariffs, whether people think they're good for the economy or not, really kind of anything you would picture as being relevant for the consumer mindset. So where consumers are trading down and whatnot. I think now that we've seen a lot of these reciprocal tariffs start to go into force, we're now thinking through what is the economic impact of them. So if we look at consumers, what share of them are saying we're foregoing purchases, or maybe we're trading down for store brands or generic brands or things like that. We're trying to get a feel for, is that activity concentrated in any particular product segments or categories? How much are consumers pulling back? And then in turn, kind of what can companies do to mitigate some of that blowback that we might expect to materialize? One of the things we've seen in our data that often something simple as kind of itemizing how much of a goods price is linked to tariffs on a receipt or on a web page can really assuage consumers when it comes to their concerns. So we're trying to get a sense of just sort of simple tactics that companies can leverage along those lines. But I think for the next 6 months, especially with the US economy looking a bit uncertain at the moment on the labor side of things, it's very much in our mind shifting into how is the US consumer mindset shifting when it comes to what they're buying or not.
And Jason, just for our audience today, what is the best way for people to engage with you? This is a little bit of a plug for your organization, but how can our audience really get the best out of what you have to offer?
Yeah, so a few different things. One is if you like this type of report and you're just looking for research along these lines, we have all of our research on a website. It's just pro.morningconsult.com. The other thing we do is if you're saying, this is helpful for kind of getting the macro context, but I need something that's really particular to my brand or my company, we do custom research as well. And then if you're saying, I kind of don't need that, but I just need an always-on read on how American consumers or other consumers are feeling about my brand, competitors, and a variety of policy issues, we have an always-on tracking program as well. So that's sort of what we do. I'd say Pro is a good place to start, pro.morningconsult.com. And if you have other particular questions, you're welcome to email us just at politics@morningconsult.com. So yeah, we love it when people reach out, and thank you for the plug.
Hey, we just have a last minute question here. It says, from your polling, how much does government policy, such as tariffs, subsidies, or Buy America provisions, actually influence decision making by executives or consumers versus market-driven factors like price and speed?
Yeah, it's a great question. And I think it's a bit of both on the consumer side of things. I think part of the challenge, especially with the price angle, is if you're going to the grocery store and you've seen the price of coffee increase. Is it because of bad weather conditions? Is it because of Brazilian tariffs? Is it because the store, just got a worse deal this year on coffee that we're bringing in? And I think similar to generic inflation narratives, just makes it difficult sometimes for consumers to disentangle these things. We try and get around it a bit by asking consumers the extent to which in their mind, any price increases they do perceive are associated with tariffs. And it may not be the case that those are actually tariff-linked changes, but for us, it's often consumers' perceptions of that matter more than whether the tariffs themselves or some other factor are driving prices. And at this point in time, people see pretty clear movement when they say yes, like a lot of the price increases we're seeing are linked to tariffs specifically. I think in part just because awareness of tariffs is very high at the moment. My sense is that might shift a bit now that the announcements are coming down, at least in terms of these broader reciprocal ones. But it's often just a matter of kind of looking at the different data assets that we have and trying to triage among them. So consumers, I think, are, as you would suspect, not always fully informed, but tariffs are pretty salient at the moment. So we think we're at least able to get a somewhat better read on this than we have been in the past.
Well, Jason, thank you so much for everything that you've offered us today. And Ben, thank you so much for keeping us up to date on the dashboard. And I would encourage anyone who's on the call to please go to our website to check the latest, greatest on our tariff dashboard. And Jason, we really look forward to seeing you again really soon. So everyone have a great Friday. Thanks for joining and have a great weekend. See you later.